I'm risking 20% of my available balance because I initially invest 5% and the stop loss is 200%. That means the stop loss is above your initial investment. That means you are risking 20% of your portfolio. So now you adjust the leverage to maybe 25x, 30x, 12x, 10x in order to reduce the percentage that you are risking. When you reduce that percentage, when you reduce that leverage, definitely you will see the percentage will change. When the percentage change, then you will see the amount that you are risking will change. If the amount that you are risking have changed, so definitely you know your plan, you know what you are risking. Then if that is with your plan and risk management, then you take the market with that leverage. That's why sometimes you will see I'm giving you a signal with 25x and I'm using maybe 20x. And maybe I give you a signal with 25x, I'm using 50x. So definitely I know that what I'm risking is not above my plan, or the thing that I'm risking is lower than my plan. Then I can increase the leverage in order to mitigate my plan, my risk plan. So this is briefly on the RRR, the risk and the reward and the ratio. I hope you guys understand. So this is the third question. And the fourth question is liquidity fallback. This is liquidity fallback. When we say liquidity fallback, is something like endorsement. It's the same as endorsement. For instance, hold on a minute. We'll delete some. So let's say the market is going off. The market is going off, creating the high, the low, the higher high, lower low, the higher high. So now I'm expecting fallback to create another lower high here. Sorry, I mean lower high. High, low, higher high, and lower high. Higher high, and then another lower high. So I'm expecting the market to create another lower high. So in this pullback, so this thing happen. Maybe the market come close here, give us this pullback, go off little bit, did not break this zone. Go off little bit here, come down and break the previous pullback. Then boom, the market go off again. So this thing that happened here, is liquidity fallback. This thing that happened here is liquidity fallback, which is endorsement. And most of the liquidity fallback, you will see them usually used to form with the shadow of the candle. You will not see them with the body. Most of the time, you will see them with the shadow. Let us go to the live chart and find this liquidity fallback in order to understand it very well. Let me see whether there is that liquidity fallback. We found one. You see, this is high and this is low, as you can see. This is another high and this is another low. So we are expecting the market to create another high before the market comes down. So the market go up small, as you can see, come back and sweep this, then go off and give us the high. So this is what we call liquidity fallback. As you can see, this thing happened. You see, this thing happened with just a wick of the candle, not with the body, with a wick. So this is the liquidity fallback, you see. So this is the liquidity fallback. Immediately when you see this thing happen in the market, whether above or below, you can long the market because you have chance. The market have already swept liquidity of those that long the market in the first place. The people that long the market in the first pullback, so the market have already swept them. Definitely, you expect the market will go off. The same as when the market is above, like the market do pullback above, come down and sweep it, then you expect the market to come down. So this is liquidity pullback in brief. So I'm very sure that you may understand this liquidity pullback. There's nothing more than that. This is just the liquidity pullback. And then if the market is in uptrend, even though I'm just giving you example on uptrend, even if the market is in downtrend, so consider something like this. Consider something like this. Then before the market come down, you consider something like this as your liquidity pullback. As I told you, it's the same like endorsement. So whenever the market push down, we are expecting the market to retest and come down. But the market go off and sweep this area shorters. Sweep them, then continue coming down. Then you will see that sweep usually used to happen with the shadow, with the wick of the candle. Then the market will continue coming down. Or you see it with the body of the candle, but the body is very small. Then the market will continue going on his way to go and break the structure. So this is liquidity pullback. I think this is all the questions. And then the point of interest is where you place your order. Your support level, your resistance level, your order block, your pure value graph are the point of interest. For example, this breaker block that I said, I will call it a point of interest. That means this point is the point that majority of the buyers or majority of the sellers have interest to short the market on that particular point. So this is just a point of interest. Order block, your order block and pure value graph are your point of interest. That means you have interest to short the market on that particular point. You have interest to long the market on that particular point. This is the point of interest. You will see some traders are writing POI instead of breakups, instead of order block. Like this area, maybe we may have order block here. So this area will be our POI, point of interest. Be our point of interest. So this area can be our point of interest. Sorry. And we can call it an order block. Most of them are the same, but the just pronunciation are different. Some people, everyone has its way that he's calling the zone. So this is point of interest. Anywhere that you are interested to short the market or long the market, this is your point of interest. That's all. This is what we call point of interest. And how am I going to know that this market, I will place a limit order or short or market order in a market? I wanted to take a trade. I wanted to execute a trade, but I don't know whether I will short the market in market price or I will just set my limit order. So this is what you will consider. I'm coming. So this is what you will consider. You know, all those things that is happening in the market is all about prediction. We are just predicting what will happen in the next move. It's just prediction. You don't have guarantee that this thing will come, but you have some assurance. You have peace of mind that based on your analysis, this thing might happen. like geographers that are telling us that tomorrow we may have the weather will be very hot or the weather will be very cold. They don't know that the weather will be very cold or hot, but they are just predicting based on some things that they experienced in the previous years or months or weeks. So this is exactly what happened here. If you read those candles, are giving you a story and the history of the previous month or days or weeks or hours. So based on that, things that happened in the previous days or weeks or hours or minutes, then you predict what will happen in the next minute or in the next day or in the next hour. I don't know whether you understand. So considering that, you definitely know that yesterday we had too much rain. The reason why we have that raining, the cloud that is in the sky, like is the cloud that you never expected. Like there is huge like cloud in the sky that time before the rain start falling. So after this cloud, this big cloud, this cloud that happened, then the markets, let's say the rain start falling like hardly. And based on the experience that you experienced day before yesterday's cloud, the rain comes small. But this cloud is very, very, like it's very hard. So that's why the market come, that's why the rain come like very hard. So when you study those things, you use them as your example and you predict what will happen based on them. That's why we are putting stop losses because we are just predicting. If our prediction is not in direct, like in right position, the market come against us. So this is the amount that we are willing to risk. The market will kick us out and continue going in his way. But if your prediction is on his way, if your prediction is right, then the market will come and touch your prediction, start going in your way. So it's all about prediction. That's why if you know what you are doing, you don't need to panic. When you place a limit order or when you place a trade, you can leave that trade, adding the risk management and go do your things. So let me show you how to identify the trade that you can take it in the market or the trade that you can take it as limit order. Wait a minute. The sound neighbor. Hold on. Please, sorry, let me answer this call. Hello? I'm sorry, guys. I'm back now. So let us assume, let us say this market, I'm coming. Hold on, let me delete this scenario. Let me draw a chart on his own in order to predict what will happen in the market. Let's say you just see something like this. Let's say you come to the market and you see something like this. Market is going off, rally, pullback, rally, pullback, rally, pullback, then rally, market structure sheet, pullback, rally, pullback, rally, pullback, and then rally. So let's say this is exactly what happened in this market. Let me do it clearly the way you understand it very, very well. I want you to understand it. Let me do as much as I can in order to make you understand. Okay, this is the previous chart, and in that previous chart, the market is giving us breakup structure. You all know that the market is giving us breakup structure. Okay, let's see breakup structure. Okay, let's say the market is giving us this breakup structures. So the market is giving us this breakup structure in the previous chart. Then the market come and give us this market structure sheet. Give us this market structure sheet, which is change of character. Then the market continuously start giving us this breakup structure below. Okay, then the market continuously start giving us this breakup structure. So this is what you see. This is what happened in our previous day. Let's say yesterday, this is what happened in the market. This is exactly what happened in the market. So today, let's say today you come to the market. You come to check on the market, or you check another pair or another coin. You see something like this: break, rally, pullback, rally, pullback, rally, pullback, rally. Then you see something like that. Today, you come and see something like that. Immediately when you come and see something like that, you start marking something like this here. Sorry, I'm doing all those things in order to understand it very, very well. Because if you analyze the market, you will do all those things. So that's why. That's why sometimes analyzing the chart is taking longer than usual, taking time. So you see something like this when you come to the chart. Then you come and draw all those things because you notice this thing happened yesterday. Because market is always repeating a history. History is always repeating himself. So this is what happened. This is what you come and see. In this chart here, let's say you long the market from here. Let's say maybe you long the market, someone or you long the market. You or somebody long the market from here. The stop loss is below this, and maybe his take profit is above here. Let's say someone long the market like this and hit TP. And then another person, after seeing this thing, they short the market in this zone. Let's say it's stop loss. Oh, sorry. This one is long scenario. Let me take a short one. Let's say someone short the market here. In the previous days that happened. So now today you come to the market and you see the same thing that happened previously. You see breakup structure, you see high, you see low, you see higher high, you see lower high, you see higher high, lower high, you see higher high, then you see market structure sheet. Then what you predict will happen in this market? Then you predict that previously or previous day, this is exactly the thing that happened. And after this thing happened, then the market come direct to the downside until the market touches this zone. So what am I going to do today is let me go and place my limit order somewhere around here, because I know the market usually used to come to somewhere around here. In this area, this is where you find your pay value graph or order block. This means your point of interest. That means you have a point of interest here. Let's say your point of interest is somewhere around here. Oh, sorry. Let's say your point of interest is somewhere around here. Let's say somewhere around here. In the previous this is the point of interest. And then person short the market and get things. So what you do here is to come and place your limit order here. Come and place your limit order here. We talk about stop loss. We had to put your stop loss in our previous classes, which is the previous high, the previous high that you have. So the shadow of that previous high, above that shadow will be your stop loss. Then you mark your previous you can mark your previous low as your take profit based on the risk and reward ratio that you are using. You mark your previous low, or you mark the last low that you're expecting the market can go to the zone. So this is what you do. If you do something like that, that means you definitely expecting the market to do the thing that happened in the previous days. Let's say the market, to repeat the history, the market come here, then continue giving you what you are expecting. So this is the prediction. So this is the prediction. This is your prediction. You need to see the market. You place your limit order. As I explained earlier, your limit order price will be here. 0.09488 is your limit order. Put that in your Bybit limit entry. And then your stop loss above this week will be somewhere around 0.09831. Then your stop loss will be that one. Always your stop loss is supposed to be above the previous high. And then your take profit will be in the previous low, in the last low that you have, the valid low, which is here, you see it green, 0.08479. So this is how to find a limit order setup. But if it is market order, that means all those things that happen, you did not aware. You went somewhere doing whatever you want to do. Maybe you forgot that you don't even come to analysis. So the time that you come to analyze the chart, maybe the market have already give you this thing. Maybe the market have already retest back, pull back to this zone. and even start coming down, something like this. So what you do, because you already know after pullback and touch the point of interest, this is what will happen. So you come after drawing all those trail lines and this breakup structure and market structure, you draw your point of interest, even though you miss the entry, but still you know what will happen. Then you take your trade in market, in where the market price is. You take the trade in market, because there is no more limit order, because the market have already mitigated the order block. So you adjust your stop loss above here, and then you adjust your profit below. On this time that this thing happened, the market have already create a new high, because this high, if the market did not come to the order block, that means this is the only high that you have. This is the previous high that you have. But the market have already come and mitigate the order block and give you another high. That means definitely this high is invalid and this is the valid high. So your stop loss will not be in this above this high. Your stop loss will be above this high that happened. This high. Then because you already enter in the market, that means you miss some pips. You miss some like moves here. So adjusting the stop loss below this high will make it clear, will make it the same as the person that used the order block as his entry. Your stop loss will be very tight, as the way his own is very tight. So you take it in market, you expect the market to continue coming down. So this is how we are identifying the limit order and the market order. So I hope this thing will work. I hope you understand it. So this is the question that all of you asked. This is the 6th question or 7th question that you asked, and I answer all of them. And then the last question is advanced class. Yeah, I'm taking advanced class, but for now, I have students that I'm teaching them. I did not finish with them. So if I take another advanced class, it will be like I will not have time to attend you people that come new, that registered new. The way I'm taking my advanced class is one-on-one mentorship. The way I'm explaining all those things to you in public with the other people, but that one will be only me and you. We'll be hosting the class between me and you. We'll fix a days and time that suit our times. I'll give you a days and the time, then you choose it based on the times that you are free. Then I will come and see whether you choose it the way I want or you change some things. Then I will check my schedule and see whether I will reschedule your own or I will just continue with the one that you picked. That's what I'm doing. This is what I call private mentorship. And that private mentorship, the minimum period of that private mentorship, that advanced class, is 2 months. From 2 months above. And it's different from the one that I'm taking you in public, because this one is between me and you. I will just offer everything to you. So this is the advantage. That one is private mentorship between me and you, but this one is public mentorship with the other students. So this is the advantage. And the advanced mentorship, all those things that we cover in our previous classes, we have already passed the level of beginner, the level of the newbie. You are now intermediate because you know some things, you know some basics. So I will just be guiding you, like showing you a lot of things, be explaining. And you see, in the private mentorship, we can even repeat one topic even 10 times until you understand, because we have enough time. But in public mentorship, some people understand, some people will not understand. So in that case, I will not come back and be repeating the same topics, because people that understand will not feel happy. But people that do not understand will be happy because we have been repeating it. But the other people that do not understand will not be happy because we are repeating the same thing. So this is the difference. That one, you can repeat it any times you want until you understand. But this one, whether you understand or not, we'll just pass it. So this is the difference. These are just the difference. And deferment also is different. Deferment also is different. Deferment is based on the way we negotiate. How many months you want, and how many days in a week you want, and how many hours per class you want. So based on this, we will negotiate. And I will tell you my price. If you can pay. If you can ask for a discount, you can ask. If I can give you a discount, I will give you a discount. If I can't, I will just say there is no discount. You should go whenever you are ready, come and register. But I will do anything to make you a profitable trader. Sorry, I can't make you a profitable trader, but I will make you a professional trader. Because your psychology and your risk management are the only things that will make you a profitable trader. But I will do my best to make you a professional trader. This is it. It depends on the months that we took. There are some people that up to now I've been teaching them for over 1 year. Since from last year, December, I think, or November. And there are some people who started since from this year, January, some February, some March. Some people register for 6 months, some people register for 3 months, 2 months. 2 months is the minimum for the advanced mentorship. So this is it. If there's any other question, you can ask. We have 25 minutes, I think, before 11 o'clock.
Yeah,
then we can call it.
you.
Because this is our last class. That's why I took a lot of time in order to make you understand. So this is it.
Thank you very much, Mr. Sodi. Thank you.
You're welcome.
You have really taken your time to break this down. What I want to say, the last assignment you gave to us, I don't know whether you attended to it yesterday, because you promised that you are going to attend to it after we submit our results, to know how far we fared on the assignment. That is on that. Then secondly, in one of our previous classes, you made us to understand that that is not advisable for us to take trades based on technical analysis alone. That we must combine technical analysis and the fundamental analysis, that is the news, to be able to have a good probability setup in taking up a trade. So can you throw light more on that for us, and how we can be able to get the fundamental analysis, the right one, and combine the two?
So based on the assignment, yes, I understand. Based on the assignment that I gave you in our previous assignments, some of you understand the assignment, but there is some correction. Some of you did not even understand what I mean. But all this assignment that I give you is under this point of interest and fullback. So I have already break down all the things. That's why I said this is the good question that you answer and that you ask me. So I use this question and I use it as opportunity to break down everything that I give you assignment on. If you notice, I give you assignment on pullback and where to enter and where to exit, all those things. But now I break it down all. So based on this thing that I explained, even if I did not say that you do good or you do bad, you said you know what you do in your assignment and you know what I explained. So you can mark your own assignment and say that yes, this assignment I call. I failed that assignment and now I got the correct one. I know what is the correction. Because it is impossible for me to be following you one after the other and telling you that your assignment is good, this is where you correct, this is where you change, this is where you do. So that's why I just left the assignment feedback until I come to this session. So after coming to this session now, I break down everything. And I hopefully you understand everything that I give you assignment on. And the second one, you say, what is the second one? I even forgot. Please, can you remind me the second one?
That is concerning combining technical analysis.
Yes, fundamental, I got it. So in our topics, we mention fundamental analysis, but due to the time, we don't have much time. You know, when you register for that is the difference between the public mentorship and the private mentorship. Because on that public mentorship, whatever we cover, if we reach our time, there is no more top off. We will not add anything. But if it is your time and we did not finish that time, however long it will take us, I must give you that class. But if we have done with that your time, then I will no more give you another class. Because if you sit down and calculate all the classes we hold, I think it will be more than 1 month class. It will be more than 1 month class, even though we are missing some and we'll postpone it to the next month. But definitely, in the normal calculation, we're supposed to have 4 weeks class, which is 8 classes and 4 AMA sessions. But I'm very sure that we do more than that. So that's why we did not have time to explain all those fundamental and other things. So that's why I said, when you do this mentorship, doesn't mean that now you are a trader, you can go and analyze the chart and take a trade by yourself. You need more guidance, you need more mentorship. That's why advanced mentorship is good for you. If you just stay like that and continue trading, I'm telling you, definitely you will continue losing. But if you keep on looking for knowledge, there's a time that you will become a professional. You can analyze everything. Even at the time that we are going together, I will notice that you started understanding. Sometimes I will just like that drop you a coin name and tell you that go and analyze this and tell me what will happen, or tell me what you see. I will not guide you. I will not say anything. I will just give you a coin. Tell me what you see. I have already analyzed and see what will happen, but I will give you in order to know whether you know what you are doing or you still need some brushes to brush your mind, to brush your knowledge in order to become a professional trader. I'm not doubting and I'm not prouding, but I'm telling you out of, since I started this mentorship, you see in that discussion group, all of you are not more than 40-something people. So in that 40-something people, I'm very sure that almost 20 people or maybe 18 people are now a professional trader. You are seeing their P&L and their analysis in the group. They are dropping the analysis and everything. There is some people in that group that they did not ever know what is cryptocurrency. I'm the one started teaching them. But now you are seeing their analysis. They will analyze and drop it. They will send the profit after taking the trade and everything. Even though now, I don't know what happened with other people, or maybe they blow their account, because I told you can be a professional trader, but you can't be a profitable trader. You are the one that will make yourself profitable trader. Somebody will make you a professional trader. So maybe they blow their account, they went back to work and get some capital. This is how we are experiencing a lot of things in that trading. So after getting a capital, you come back and continue or something like that. So this thing can happen, or maybe you are too busy doing other jobs. That's why they are not dropping the VNL or something like that. But before, if you check on the previous chart, you see a lot of screenshots of their analysis and their profit and everything. So I'm hoping you people will be more than them. Even if you did not register with Advanced Mentorship and you stay on that group just like that, you will benefit a lot. So this is it. I hope now you understand. The fundamental analysis, let me just give you a brief, even though we don't have that time for the fundamental analysis. Maybe in the next classes, when you register for the intermediate class or something like that. So, because you are no more newbie now. So the fundamental analysis, we have fundamental by social media. We have fundamental by economic news. By economic news. These are the two types of the fundamentals that we have, majority of the fundamentals that we are considering. In social media, you will see that one of celebrity or one of professional trader or one of banks or institution, financial institutions will post something like so institution wanted to buy so amount of Pepe or amount of Myro. So definitely that thing that they've paused will affect the market fundamentally in order to make that particular coin to pump, because majority of traders will go and long that market. And the market is moving based on liquidity. So if the people like put a lot of liquidity, will make that particular coin to form off. This is by social media. And there are some exchanges that they will come and say that they wanted to list so coins, like decentralized exchanges. They wanted to list so coins. I mean, decentralized exchanges. They wanted to list so coins. So if that exchanges are big exchanges and they are popular, a lot of people are trading on that exchanger. So they will buy that particular coin on that exchanger. So the other exchanger that have already listed that coin, in their exchanger, that coin will start pumping, because the people that are in that exchanger will buy the coin, and the people that are in that exchanger that wanted to listed the coin will long the coin. So it will make that particular coin to have high demand. So the coin will form. And even if that exchanger say that they wanted to delist so coin in the exchanger, that means the coin has problem, or they have problem with the community of that particular coin. So a lot of investors and a lot of traders, consumer traders and financial traders, financial institutions, will go and remove their money on that particular coin, because they started like pairing that particular coin. This exchanger wanted to delist it. That means there is problem. Let me remove my money. This person will remove his money. This person will remove money. That one will make that particular coin dump. That's why if you wanted to trade, let's say I wanted to trade a TIA USDT. So at least I need to go check on social media and see whether there is fundamental on that particular coin that I wanted to trade today. Because sometimes you analyze the chart technically and take a good entry and exit. The market is even in profit. Then last you come see the market will come and hit your stop loss with big move. Maybe there is fundamental on that coin. So you need to go and check. Where you check and see all those things, all those fundamental is Twitter, Disco, especially Twitter, CoinGecko, then CoinMarketCap. This is where you will see those kind of fundamentals. This is the best way you see those kind of fundamentals. So this is by social media and exchange. Then by economic, we are trading with the USD, United States dollar. So anything that happens with United States, it will affect our trade. It will affect the coin that we are trading. So that's why we are considering the high impact news, high impact event that United States have. In a month, we usually have big event that usually used to happen, which is POMC, PPI, CPI, and then NFP. These are the high impact news that usually used to happen in a month. So you need to know the time that this event usually used to happen, and you need to know how to read the forecast and the previous results in order to determine the actual result. So you need to read all those things. This one is topic himself. That's why I say we don't have time. But you will get that economic calendar and those events on the Forex Factory. You go to your Chrome and search Forex Factory, or maybe I think there is another one which is investment.com and lots more. I forgot them, but I'm personally using the Forex Factory. This is what I'm using, the Forex Factory. So this is it. These are the three things that you consider: the exchanges, checking the fundamental on that particular exchanges, and checking fundamentals on the social media, and checking fundamentals on based on economic calendars. So these are the three fundamental analysis that we have. There is also sentimental analysis, even though we don't have time to know the market sentiments. People that are greed, people that are fear. There's a lot of greed on that particular coin. There's a lot of fear, or there's extremely greed, or something like that. So we don't have that much. But this, if you are on the advanced mentorship, you may know a lot. I think this is the things that I can say based on the fundamental analysis. So any other question, because we don't have time.
Thank you, Mr. Sadiq. As I said, maybe some of the things I'm expecting, okay, maybe we might not be able to take trade on our own, but I was expecting maybe at least now if you drop a chart, I will be able to interpret it and know what is happening. So, and it's related to what I was asking about FTM last time. So, and I saw the same scenario plays out with Miro as well. So I don't know if you can go where the signal that you drop. I have a question there that I want to ask.